Hello everyone. So this series we will be recording down the grade 12 accounting course about what have we been doing in the class and also the tests and quizzes. And yeah, let's just jump right in. So this is the course outline for the grade 12 accounting, and it states each unit what are we going to learn. And the first unit, the accounting cycle, this is basically what we learned in grade 11, and it is a short review. And then financing, asset accounting, financial analysis and decision making, and also the issues in accounting. In other words, this is ethics. So you will notice that the first three units, each one of them we will have a unit test, and this one we will have an assignment in the third quarter of the class, because our teacher, Miss Adams, she wants to give us some time to begin working this and leave some time to prepare for the final exam. And this one is a case study, and I'm not very sure how it works. And this is a breakdown of the course marking. And this is the first chapter official note. And there's some terminologies, transactions, what is transactions, different people, they exchange something has value in it. And external and internal, just like the name it suggests. External, outside the company, internal is inside the company. And there are 4 different financial statements. And the order to prepare them is income statement, then statement of owner's equity, balance sheet, cash flow. And I'm using the information of the financial statement. Okay, let me just quickly find the note. Yes, here we go. An internal user, basically people inside the company that need the information, such as the manager. They use the information to make some decisions. External users, such as investors, to use the information to decide if your company is worth their money to invest or not. Creditors, to assess your credibilities. Taxing authorities, to collect tax from the companies, and others such as labor unions, regulatory agencies. And bookkeeping and accounting. Accounting is divided into financial accounting, managerial accounting. So financial accounting is preparing for the statement for the external users, and managerial accounting is providing the information for inside the company and make decisions. And yeah, this is a short graph of the accounting cycle. So the transaction occurs, you record it down, and you try to prepare for the report for the users underneath. And ethics, the standard that all the accountant uses to judge what is right and what is wrong. And the GAAP rule, the general accepted accounting principle, a set of standard. And cost principle, basically when you buy something and cost of the goods you buy is going to be written down as the transaction occurs. It means that even if the things you buy, it may lower or raise by value, it becomes more expensive or becomes cheaper, you don't care. And the cost of this is just how much you spend to buy it. And going concern assumption, you're just assuming that the company is going to operating forever. and monetary unit assumption. So each items generalized in accounting should be represented by values. Let's say you have an equipment and you just recording down the estimate value for the equipment, and cash, whatever, they are all gonna have a value of money. And economic entity assumption. So it says that anything outside of the company, we just don't care, and it should not appear on our company's financial statement. And this is the international standard and the standard for the private enterprise. And in the public accounting auditing, you examine the information and taxation. So it provides some general service of tax related, and different kind of accounting, private, non-profiting. Let's take a look at this. This is the our first official assignment. So we got a lot of different transactions over here, and we changed the amount of different accounts. Let's say the first one, Mr. Sam Doty invested $8,000 in his business. So we add 8,000 cash and also add 8,000 capital, and we just recording down all the transactions and get a sum to prepare for the financial statement, which is over here. So the header and also the name of the statement, and this is for the date or the period. And for the income statement, you got the revenue and the expenses. So you have revenue minus the expense, and whatever is left is your profit. If this becomes negative, that means your company is losing money. And the same, this one, statement of owner's equity. So the name of the company, the type of the file, and date of the period or the period. You get the beginning capital, and then you add the net income and also the investment, and then you minus the join over here, and then you get the ending capital of the month ended. And the balance sheet, the same heading, type of file, date, or period. So the balance sheet is the only one that has the date instead of period, because this is a snapshot of the company, that what you currently have right now, how many assets you have, and how much debt and equity, how much do you have at the specific time. I don't care like last week or maybe last month. I care about what do you have right now. And we calculate liability, owner's equity. So all the asset plus the equals to the liability plus the owner's equity, and the number should match. If it doesn't match, then it means you must did something wrong and you are in some trouble. And this is the cash flow statement, and this is not yet complete yet, and I should be completed. But whatever, let's still talk about this. So the cash flow statement, it has 3 different sections. Number 1 is called the operation activity, and the second one, which I did not write, is the investment activity, and the last one, it should be financing activities, and it shows the money in and money out of the company. And if a company ever ran out of the cash, and you probably died. And yeah, that's all I get for this week. Not a lot. First week of the school, and we don't have a lot of homework. And yeah, thank you for watching and staying me till the end. And hopefully see you in the next video. Bye.